right, so let's talk about doubtful accounts or bad debts expense. They're the same, okay? So in every business, there will always be a time when a customer cannot pay their liabilities or the company's receivable from them. So every year, businesses recognize what we call doubtful accounts expense or bad debts expense. So there are two methods in accounting for doubtful accounts. These methods are allowance method and write-off method. Direct write-off method. So the accounting of doubtful accounts in bad debts expense, we have allowance methods and a direct write-off methods. When the company uses an allowance method, the entry will be debit to doubtful accounts and credit to allowance for doubtful accounts. All right. Now, if the company uses a direct write-off method, the entry will be debit to bad debts expense and credit to the accounts receivable. So this is the methods where we account for our doubtful accounts expense or bad debts expense. We have our allowance methods and the direct write-off methods. For allowance methods, we set up an allowance account. And the allowance account is a contra account of our accounts receivable to get our net realizable value. For direct write-off methods, we set up our bad debts expense and we take that amount from our accounts receivable directly. So we're taking it out directly from our accounts receivable for direct write-off method. Now, for the calculations of the amount of our doubtful accounts or bad debts expense, we have three methods, right? Three methods on calculating the amount of our doubtful accounts and bad debts expense. And these are percentage of credit sales, percentage of accounts receivable, and our aging of our accounts receivable. All right, there are three methods in calculating the amount of our accounts or doubtful accounts or bad debts expense, and these methods are percentage of credit sales, percentage of accounts receivable, and aging of accounts receivable. The percentage of sale is actually our income statement approach. And these two, percentage of the accounts receivable and the aging of accounts receivable, this is your balance sheet approach or what we call statement of financial position approach. All right, so let me repeat this. Doubtful accounts or bad debts expense, we use these two methods in accounting for the journal entries of the bad debts expense. All right, for the calculations of the amount of this bad debts expense, we use this method. All right, so allowance method, we set up an allowance for doubtful accounts, and for direct write-off, we directly take the amount from the accounts receivable. We will discuss more of the allowance methods and direct write-off methods side by side, so we will understand the journal entry on every transaction. Alright, let's discuss more of the two methods in recording the doubtful accounts or the bad debts expense. The two methods of allowance methods and the direct write-off method. So let me draw a line here. Is this one? Let me draw a line here for our transaction and another line here for our allowance method. Alright, and then we have our direct write-off method here. So let us discuss the transactions, the journal entries on the doubtful accounts or the bad debts expense using the allowance method as well as the direct write-off method. So let me write down all the transactions that affects the doubtful accounts or the bad debts expense. Alright, these are the transactions that involves or that affects the doubtful accounts or the bad debts expense. So first, to record the doubtful accounts, if we have an accounts receivable that we are doubtful of collecting that accounts receivable, our records using the allowance method is debit to doubtful accounts, expense, and credit to allowance for doubtful accounts. Alright, to record the doubtful account expense under allowance methods, we debit doubtful account expense and credit to allowance for doubtful accounts. We can also use bad debts expense. So debit bad debts expense or credit allowance and credit allowance for bad debts. Alright, under write-off methods, we don't have an entry. Okay, to record if the collectability of the accounts is only doubtful, under direct write-off methods, we don't have an entry. Alright, now write-off of the receivable. If the accounts receivable is proved to be worthless, then under allowance methods, we are going to take it out from our accounts receivable because it's worthless. So under allowance method, we debit allowance for doubtful accounts, then we credit accounts receivable. Alright, under write-off methods, if the receivable is proved to be worthless, then this is the time we are going to recognize a bad debts expense. So we debit bad debts expense, not doubtful accounts, and we credit the accounts receivable. So we directly write off the amount that is worthless to the accounts receivable, right? For direct write-off method. Now, what is a recoveries? A recoveries is when you collect or the collections of accounts receivable that is previously written off. So that's recoveries. So under allowance methods, we are going to debit accounts receivable to set up that accounts receivable again and credit to allowance for doubtful accounts. Alright, then we record the collections of the cash. So we debit cash for the recovery or the collections, and we credit the accounts receivable to cancel that receivable that we collected. Alright, under direct write-off methods, okay, depends on the recoveries. If the recovery is on the current year or the recovery is on the subsequent year. What do I mean? If it's on the current year, let's say for example, we write off an accounts receivable on July or August. Then we subsequently recover that accounts receivable on November. Then the collections or the recovery is on the current year. So our entry, if it's on the current year, we debit accounts receivable and we credit the bad debts expense. Then we will record the collections. We debit cash and we credit the accounts receivable. If the recovery is on the subsequent year, meaning we write off on July, then we recover January or February, then our entry will be debit to cash and credit to other income. All right, let's do the summary. So for doubtful accounts, we have two methods in recording the journal entry of this bad debts expense. So we have two methods, allowance methods and the write-off methods. And these are the transactions. To record the doubtful accounts, if it's only doubtful, under allowance methods, we set up allowance for doubtful accounts. On the direct write-off methods, we only recognize a bad debts expense when it's proved to be worthless, when the receivable is proved to be worthless. So if it's proved to be worthless, then we have to write it off from the accounts receivable. Under allowance methods, we have debit to allowance for doubtful accounts and credit to accounts receivable. Then on the direct write-off, this is the only time we recognize the bad debts expense. So we debit bad debts expense and we credit accounts receivable. Remember, on direct write-off, we don't recognize any bad debts expense until the accounts receivable is proved to be worthless. All right. On recoveries are the collections of accounts receivable previously written off. So under allowance methods, when you have a recovery, we debit the accounts receivable and credit the allowance for doubtful accounts. So we set up the accounts receivable first, then we credit the allowance for doubtful accounts. Then we record the collections of debit to cash and credit to accounts receivable, canceling that accounts receivable that you already collected. Under direct write-off methods, if it's on the current year, then we debit accounts receivable, then take that bad debts expense because we already collected it. Then we debit cash for the collections and credit for the accounts receivable. But if the recovery is on the subsequent year, on the following year, then we debit cash and we credit other income. All right. Now let's do the T account of the accounts receivable and the allowance for doubtful accounts. All right, so let's see. On what is the normal balance of the accounts receivable? The normal balance of the accounts receivable is on the debit side, right? So on the debit side, we will start with the beginning balance. So what are the transactions that affects our accounts receivable? Credit sales. When the company has a transactions selling on credit, we increase our accounts receivable. So we debit accounts receivable and credit to sales. So on the debit side of the accounts receivable, we increase when we have sales, credit sales. All right. And any recoveries. So when you have a recovery, we debit accounts receivable. All right. So on the debit side of the accounts receivable, we have our recoveries. And what are the transactions that credits the accounts receivable? If we have a collections. So if we have collections, we credit accounts receivable. All right. And if we have a write-off of the receivable, we credit the accounts receivable. So on the credit side of the accounts receivable, we have our write-off. So these are the transactions that affects the accounts receivable. Normally, our accounts receivable normal balance is the debit side. So beginning balance is on the debit side. And then we increase when we have a credit sales. We increase accounts receivable when we have recoveries. On the credit side, we decrease accounts receivable when we have a collections. And that is debit to cash and credit to accounts receivable. Then if we write off a receivables, we credit the accounts receivables. We debit allowance for doubtful accounts for write-off, and we credit accounts receivable. Right? Now, let's go to the allowance for doubtful accounts, T account. So the normal balance of our allowance for doubtful accounts is on the credit side. So this is where our beginning balance. So what are the transactions that increases the allowance for doubtful accounts on the credit side? When we record a doubtful accounts, we credit allowance for doubtful accounts. We debit doubtful accounts expense or bad debts expense, and we credit allowance for doubtful accounts. So right here is to record the doubtful accounts or bad debts expense. All right. And then if we have a write-off, we debit allowance for doubtful accounts. So on the write-off of the receivable, we debit allowance for doubtful accounts. We decrease the allowance for doubtful accounts. So on the debit side, we have write-off. Now, what are the other transactions that affects the allowance for doubtful accounts? Recoveries. Recoveries, we credit allowance for doubtful accounts. So we increase the allowance for doubtful accounts. So these are the transactions that affects the allowance for doubtful accounts. Normally, our allowance for doubtful accounts balance is on the credit side. So our beginning balance is on the credit side of our allowance for doubtful accounts. Then we decrease this account when we write off a receivable. We increase this account allowance for doubtful accounts if we set up our doubtful account expense or bad debts expense. And any recoveries will increase our allowance for doubtful accounts. All right? And this is your doubtful accounts and bad debts expense. All right, now let's talk about the three methods of estimating or calculating our doubtful accounts expense or our bad debts expense. Now, before we get into that three methods of calculations or estimating, let us recall our allowance for doubtful accounts T account. So on our T account, the normal side or the normal balance of our allowance for doubtful accounts is on the credit side. So any credit on the allowance for doubtful accounts will increase that account, or any debits on that account will decrease that account allowance for doubtful accounts. Now, let's say we have our beginning balance of our doubtful accounts. We minus our write-off. Okay, why minus? Because when we have our write-off, our entry is debit to allowance for doubtful accounts and credit to accounts receivable. So from the beginning balance of our allowance for doubtful accounts, we minus our write-off. Now, we add back our recoveries, or we add recoveries. Why add? Because when we enter a recovery, we debit accounts receivable to set up that receivable, and we credit allowance for doubtful accounts, meaning we are increasing our balance of our allowance for doubtful accounts. So for recoveries, we add recoveries from the beginning balance of allowance for doubtful accounts. Then we come out with the balance. We come out with the balance before doubtful accounts expense. So this is the balance before providing or before the provisions of our doubtful accounts expense. Then we add that expense, then we come out with our ending balance of our allowance for doubtful accounts. All right, now let's get into the three methods of estimations or three methods of calculating the doubtful accounts expense or the bad debts expense. First method, which is the income statement approach, is the percentage of credit sales. All right, from using this percentage of credit sales, we take our credit sales multiplied by whatever percentage the company provides for their doubtful accounts expense. So multiply with the percentage. So whatever amount you get here, this is your doubtful accounts expense. Okay, let's say for example we get 35,000. 35,000 is your doubtful account expense. All right, from this amount right here will be our 35,000. All right, the second method is the percentage of accounts receivable. All right, second method is the percentage of accounts receivable. From the accounts receivable, usually it's the ending accounts receivable. From our accounts receivable ending, multiply with whatever percentage the problem will give you. All right, let's say for example this amount right here, let's say this is 150,000 sample, right? Okay, then we have our 150,000. For aging of accounts receivable, which is the third method. All right, this is how we compute for the aging of accounts receivable. The problem will give you the number of days accounts is outstanding. Let's say, for example, an account is outstanding for 0 to 30 days, 31 to 60 days, 61 to 90 days, and so on and so forth. So then you multiply whatever the amount here, multiply with the percentage the company will give you, okay, or the problem will give you. So we have some percentage here. Then we add all the amount that we get from the percentage. So let's say for example this amount is 120,000. Example, we get 120,000 from calculating all the outstanding accounts receivable according to the number of days and according to the percentage. So let's say for example we have 120,000. All right, this two amounts, this is not your doubtful accounts expense. What is this? This is your ending balance of your account or your allowance for doubtful accounts. All right, so this amount right here that we computed or calculated from the percentage of the accounts receivable or the aging of accounts receivable, this amount right here, this is your required ending balance of your allowance for doubtful accounts. So how do we calculate for the doubtful accounts expense using these two methods? So let me write down another formula here for our two methods. All right, using these two methods here, the amount that you calculate on using percentage of accounts receivable and aging of accounts receivable, this amount is not your doubtful account expense. This amount is the required ending balance of your allowance for doubtful accounts. So how do we get our doubtful accounts expense? So if this amount right here is your ending balance, we can squeeze into or plug into our doubtful accounts expense. So if we have 120, for example, of amount that is required on our ending balance for our allowance for doubtful accounts, and we have the balance here, let's say for example we have 100,000. All right, we have a 100,000 balance before the provisions of doubtful accounts expense, and our required ending balance is 120,000, meaning to say our doubtful accounts expense will be 20,000 doubtful accounts expense. All right, now let me repeat this doubtful accounts calculations or estimations. So we have three methods. We have the percentage of credit sales, which is our income statement approach. We have our percentage of accounts receivable, which is one of the balance sheet approach or the statement of financial position approach, and the other one is the aging of accounts receivable. Now, the amount that we get from multiplying that percentage from the credit sales, this is already your doubtful accounts expense for the year. So from the beginning balance, allowance for doubtful accounts, we minus all of our write-off, and we add our recoveries. Then we have our balance before our doubtful accounts expense. Then we add our doubtful accounts expense to get our ending balance of our allowance for doubtful accounts. This is using this method. All right. Now, if you're going to use these two methods, whatever amount you get from these two methods, this amount is the required ending balance of your allowance for doubtful accounts. Now, how do you get your doubtful accounts expense for the year? From the beginning balance minus your write-off amount plus your recoveries, you get your balance before doubtful accounts expense. Now, you add your doubtful accounts expense, then you have your ending balance allowance for doubtful accounts. So if you have the ending balance for allowance for doubtful accounts as 120,000 and your balance before doubtful accounts expense is 100,000, meaning to say you have a plug-in of 20,000, that is your doubtful accounts expense using these two methods. All right? But using this method, we get the doubtful accounts or the bad debts expense right away. All right. So in your actual exams, the problem might ask you the doubtful accounts expense or the bad debts expense right away, or the doubtful accounts expense using this method, the percentage of credit sales. Take your credit sales times the percentage, that's already your answer. But if you are required in the actual exam to calculate for the ending balance of the allowance for doubtful accounts using this percentage of credit sales, you have to begin or to start with the beginning balance of the allowance of doubtful accounts. And then you end up with the ending balance of allowance for doubtful accounts. All right? Now, if you are required to calculate for the ending balance of your allowance for doubtful accounts using these two methods, whatever amount you already got from multiplying the percentage to the accounts receivable ending, this is your ending balance of your allowance for doubtful accounts. This is your answer, okay? Or if you use the aging of accounts receivable, whatever amount you get from using this method, this is already your ending balance of your allowance for doubtful accounts. Now, but if the problem requires you the doubtful accounts expense using these two methods, then you start with the beginning balance of the allowance for doubtful accounts. You minus all the write-off plus all the recoveries. Then you end up with the balance before the provisions of the doubtful accounts expense. Then whatever amount you get here, this is your ending balance. Then you plug in your doubtful accounts expense. All right, so this are the three methods how to calculate or estimate our doubtful accounts expense or bad debts expense.